Hi guys and welcome to the trading show. This week we are gonna talk about
markets, metals rise. Our portfolio, natural gas supplies. Tip of the week, Dax Future. And the weekly rollover.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Okay, this week there is not much to report. We see fairly low returns for the stock indices, excluding Nasdaq, which continues its crazy run-up despite the problems related to the pandemic. The financial sector, which above all shows interesting performances during the current week, is the metal sector. We can see in detail how copper is in a strong uptrend. It has in effect returned to the highs of the beginning of 2020. The same goes for silver. Gold is at its highest values, while the weakest of all precious metals is platinum. Certainly notable is the wheat that has had a strong explosive movement with a 7% return. If we analyze the returns over a longer time horizon, we can see that the strongest sectors are equity indices and metals, which shows positive performances at 1 week, 1 month and also at 3 months. Among the weaker underlying, there are coffee, which continues in its downtrend, and cocoa future, which is at all-time lows. Talking about volatility, current values are still very high when compared with annual average volatility. In fact, all the underlyings show very high values in their ranking. As for the implied volatility, we see in this chart the SPX volatility indices and their evolution over time is still present a sort of anomaly because we see long-term volatility, which usually has the highest value during uptrend in the stock market, with a medium value. I believe this can be considered a sign of the fear that financial operators still have for the immediate future due to the pandemic crisis. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos. Here we are in this new meeting with trading system analysis of our portfolio. Today I'm gonna show you 3 systems that have reached good profits in the last week. We can start from the first system called GC Prime. It is a trend follower strategy that enters on high and low levels of the day before on the gold futures market. As we can see in this trade, where the strategy entered long on the level of the high of yesterday, the strategy was able to reach a take profit target. Now, taking a look at the strategy performance report, we can see that the strategy managed to gain $43,000 with a drawdown of just $4,500. The strategy has a variable position sizing rule calculated on the average true range that, as we know, is the indicator that allows us to calculate the volatility in points of the instrument. The maximum number of contracts held was 4, and as you can see, in the last week the strategy entered with 2 contracts. The equity curve looks very steady, and the profits are satisfying. The strategy performed really well during the last week, above all if we think that in the years before 2019 and 2020, the original idea of the trend following strategy on gold market was going through a bad period, in which it seemed that gold was changing its dynamics. Fortunately, the strategy was able to recover from the bad period, and we can see that the equity line we obtained in the last year is very good. Also, the annual period analysis, we can see that the strategy managed to gain $24,000 in just 35 trades with a percent profitability of 74%. Alright guys, now we can move to another system, this time on the energy markets. In particular, we are going to analyze two systems on the natural gas future market that have performed well over the last week. The first strategy I want to show you is a reversal strategy that enters after a fade breakout on the high and low levels of the day before and closes its position at the end of the day. In fact, we can see that yesterday it made a very profitable short trade. Here the strategy waited for a close above the high of yesterday and consequently entered short after a close under the high of yesterday. Now we can go to see our performance strategy report to see what results the strategy obtained over the last year. As we can see, the equity curve is really nice and steady, and I also want to show you how the monthly period analysis shows a very steady performance in 2020. The strategy from January to July produced every month a profit, 620, 790, $1,100, until the last month, that is the current one, where the strategy made another profit of $1,100. So we can affirm that the natural gas future has shown a very strong reversal tendency over the last year. On the contrary, I want to show you another strategy, this time a trend following one, that enters breakout on the high and low of the day before, respectively for long and shorts, and waits for the creation of a range, or a box, in the last 5 days. So the difference between the maximum high of the last 5 days and the lowest low of the last 5 days must be greater than 125 ticks. It's like we said to the strategy to enter only when the price excursion is big enough to allow us entering at market with a trend following method. Now, from the strategy report, we can see that the equity curve is steady and positive, of course with a break here during these months, but it is pretty normal when we talk about trend following strategies. I would also like to show you the equity curve of the long side. As we know, the bearish bias on this market is remarkable. That's because of the storage and the transportation costs that impact on the future price. As we know, natural gas is not liquefiable, so its transportation is expensive. In fact, generally, the natural gas future is in a contango situation. It means that the current expiration is priced at a lower price compared to the far expiration, because the future itself incorporates those costs. So we are quite happy in seeing that also on the long side the strategy has performed well. And that's why on the forum, when students ask me if it is correct to create systems that trades just on one side, I say that I prefer to trade the weaker side of the strategy too, to be more prepared to a possible change in the market.
Hello everyone and welcome from Andrea Unger. So here in this screen, we can see I have plotted the Dax Future with 60 minutes as a chart resolution. And in the second part of the chart, instead, we can see the cumulated sum of the average delta of each bar of the day. And so here is shown the average movement that the Dax Future does every day. Of course, this is only an average, but it may suggest you something for your operativity and for your trading. For example, here we can see that on average, the first hour of negotiation on the Dax Future is strongly bullish, while the second hour instead the price on average goes back, and then from 10 a.m. the price on average goes up again, so there is again a bullish movement. Then from 14, so from 2 p.m. until 5 p.m. the price usually goes down again, and finally from 5 p.m. until the end of the trading session the price raises again and recovers the downward movement that there was previously. So what can I do, and what I usually do? So usually I have a trading system that goes long on 5 p.m. but it doesn't close at the end of the trading session here. It usually closes at 9 a.m. of the next morning. So I try at least usually to exploit a bigger movement than the intraday movement, and so I usually try to go from long from 5 p.m. until 9 a.m. of the next morning to maximize the effect of this bias and both of this bias. Of course, this is something that happens on average. This kind of effect doesn't happen on everyday basis, but it's pretty safe, and from a statistical point of view, of course. And I've tested also the single other main movements like this, and like this, and I hadn't successfully created other strategies based on this kind of approach on the DAX. Some years ago was really powerful, this bearish bias from 9 a.m. to 10 a.m. but in the last few years this kind of approach was not so successful anymore. And instead, the last bias, so the one I usually use, has become more, let's say, more robust and in general safer.
So, rollover calendar. Current future will be settled next week, but the most liquidity is already in September. I also remind you that shortly there will be the rollover of the crude oil future, but the settlement date will be on 21 of July. Anyway, the next week it will be right to roll over crude oil future because the biggest open interest is already in September. And finally, Dax Future will expire the following week. Okay guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. It's our free webinar during which you will see the steps to build your trading systems and become a profitable trader, how to have an edge over other traders and professionals in the sector, and how to build a diversified portfolio of automated strategies. Finally, if you liked this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.